Will subscribing to Zomato IPO be profitable? No. Zomato is not projected to be profitable in the long run, and even their IPO will not be beneficial since it is overpriced by 300%. Many stocks offer better potential than Zomato, with healthier companies offering a greater chance of providing returns for investors. Decisive fundamental factors are critical for deciding if it's worth taking the risk on an investment like the Zomato IPO. It is advisable to do your homework before investing in any company that offers a stock as part of its IPO, especially at such high price tags like this one. The recent announcement says that revenue growth was up by 323% last year, but they lost 91 crore rupees and have seen losses from 20 prior quarters consecutively at 184.3 crore rupees. They have seen losses from 20 prior quarters consecutively at 184.3 crore rupees and had aggregate net losses of 232 crore rupees in 2016-17. Due to this, the company's valuation has been inflated by 300%. Interestingly, Zomato's chief executive officer says he is proud of his company's profitability and says there is absolutely no reason why Zomato cannot be profitable this year. The fact that they have been consistently loss-making for the past 5 years seem to have fallen on deaf ears. Zomato might go public in early 2018, but it seems their IPO could not wait more than a few months. This is because Zomato is running out of cash and approaching an event horizon, according to a report by research house Redseer Consulting. No wonder they are desperate for money faster than usual. This means that it will be easier to make money from their IPO since more people would invest in them due to the hype about their stock. Zomato went public on the Indian stock market, NSE, earlier this week. Given it's a new company and not too many people know about it, there is an element of risk involved. The good news is that investing in stocks can be less risky than just putting your money in the bank because you don't pay interest on those funds as opposed to when you're lending your money to, say, Citibank for a fixed term, at the current rates of around 4% across all deposits by both regular individuals and large companies. Assuming an interest rate of 5%, over 10 years, $1,000 becomes $1,488 with compound interest, but this doesn't always apply. Every investment has its risk profile after. Stocks can be volatile, but that's the point of stocks. They're meant to make you money which previously wasn't possible because you had no access to such instruments. Stocks let you invest in companies and receive profits in return, rather than just lending money out with no chance at a profit in return. Of course, there are other factors as well. Introduction to Zomato. Zomato is a restaurant discovery and information platform with users in over 23 countries. The company has mobile applications for Android and iOS and desktop versions of their website that feature an online ordering service for restaurants located near the user. It also allows users to leave reviews on restaurants that are featured on the website. Zomato started in Indore, a city in central India, and has grown to cover 22 countries across 4 continents. Deepinder Goyal founded the company, and Pankaj Chadha left the company in 2012 due to some differences in business strategy. Around 85% of their revenue comes from advertising, and they get the rest from online ordering services. This revenue model is quite similar to Yelp, which generates about 90% of its revenue through ads. The way Zomato has expanded globally in a short period is commendable, and it has been one of the significant factors behind its growing popularity. This move has also strengthened their position as a future rival to Yelp, which has been the leader in restaurant review and discovery platforms for quite some time now. Zomato is a listed company and has seen its valuation increasing over 300% since it started. They had plans to go public last year but postponed this plan due to technical reasons. This listing will help them gain more traction and would also help them raise funds to finance their international expansion. I am pretty sure this won't be the only IPO of a tech company we'll see in 2018, and considering that Zomato's arch-rival Yelp went public last week, we are likely to see more restaurant review network companies going public soon. If your goal is to invest in stocks and hope for a profit, then the Zomato IPO seems like a reasonable opportunity. The stock market is volatile by its very nature. When everything is going well, it's easy, invest in XYZ company at nothing, wait a few months for the stock price to go up, and sell it. But when things turn sour, it can be challenging. Zomato will trade on the Indian stock exchanges. I recommend doing some research before blindly investing money into any new IPOs, just as you would with any other stock investment. You're probably wondering if we should invest because of something called Nifty or BSE. Whatever that is. Don't worry. That's something you don't have to worry about. You can invest via a brokerage account in funds like Sharekhan or Zerodha. They do need some money to get started, but it is straightforward to understand and safe. Please don't be foolish, and take my word for it. If anything happens to your holdings, be it Zomato or any other company you bought via these brokerage accounts, the broker will compensate for your losses. So don't worry. It is straightforward to create a Sharekhan, Zerodha account. You need to provide them with your PAN and Aadhaar card details as well as some basic information. These are around 4 documents that you'll need to provide, and once you do, they'll fund your account with the amount required to buy stocks. If you don't want to invest via this method, I recommend using Amazon or Flipkart gift vouchers as a mode of payment. These vouchers expire after buying the shares, but it's an easy way to buy Zomato shares and does not cost anything extra. I hope this article was helpful to you in some way, and if it was, please share it with your friends or on social media because your support is what keeps me writing these articles. I like writing about stocks as a hobby, so don't expect anything special, but I'd appreciate it if you could take the time to comment below or send me a message. This is the first B2B article, business to business, I've written. Let me know if you like these in the comments section.